If you are serious about your portfolio for 2024, then get yourself to the Vancouver Resource Investment Conference in Vancouver, British Columbia on January 21st and 22nd.
Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We're counting down to the VRIC. It's coming up January 21st and 22nd. There's a link in the description below where you can get your tickets. For now, we're bringing the VRIC to you with our expert series of online panels. And today I'm joined by Jeff Clark of the Gold Advisor and Christopher Aaron of iGold Advisor to discuss what else, gold, their outlook for the metal in 2024, and much more. Gentlemen, it's great to have you on the show.
Thanks for having me, Jesse. It's great to be back with you.
Yeah, thank you, Jesse. It's great to be here.
So I want to start, of course, with the fact that gold reached all-time highs this year. This is something that a lot of people were forecasting. However, a lot of those same people were forecasting that once we get to all-time highs, it's going to be off to the races from there. So people have been a little disappointed with the fact that it's come back down, still performing very respectably around the $2,000 level. Are investors in the gold space hoping for too much in our current age of social media hype? And Jeff, I'll start with you.
Well, gold is up because of short-term factors, in my opinion, right? The Fed signaling they may not only stop raising rates, they actually said they may lower them 3 times next year. So that's obviously a catalyst for gold as well as other assets. And so part of it was that. Part of it's the ongoing geopolitical conflict. Part of it is the U.S. dollar. U.S. dollar got, pardon me, got weak there for a second, just like my voice. So I think all those factors contributed to, gold spiking up. But those are short-term factors, and those didn't really lead to staying power with gold remaining, at new all-time highs. In the big picture, in the long term, we have much more serious factors that are going to impact gold, starting with a recession probably in 2024. Gold has risen in most recessions. So, and then you have the monetary issues, you have the debt, you have potentially more conflicts continuing. We're probably going to see money printing again in 2024 because they always do that in a recession, right? They justify it by doing civil works or whatever the case is. So there are a lot of things, and there's always a black swan. By the way, not to mention this, or take all the time, but I went back and looked at all the crises over the past like 50 years, and I just started listing them out. And what I realized looking at the list is roughly half of them were black swans. And so a black swan, you have to count on the possibility of a black swan if half of them in history have been black swans. So there's a lot of factors that I believe are going to impact gold into the new year. So don't fret that gold is not sustained a new all-time high. I think that's coming.
And Christopher, do you see the same catalysts for gold moving into the new year? And what are your thoughts on the price action of gold going up to all-time highs in 2023?
Yeah, well, I have a slightly different approach to the markets, I think, in general, and both are perfectly legitimate. There's always multiple ways to evaluate markets. My discipline is primarily in technical analysis, or what we would just call price analysis. So I believe the price is the most important thing, and that all those fundamentals are what is impacting the price. Of course, those are the drivers. But as human beings, it's impossible for us to know all the fundamentals at any one moment, because the fundamentals are the sum of billions of people around the planet thinking different things, acting in different ways, some relying on good information, some relying on false information, et cetera, et cetera. So I focus on the price foremost as the meeting place of all those fundamentals. And when I look at physical gold right now, this is a discipline I've been studying for 15 years, technical analysis. And by the way, this discipline goes back, it's interesting, Jesse, I believe you're overseas right now in Japan. But this discipline goes back to the 1700s in the rice markets of Japan, when traders of different strains of rice came together and said, hey, let's try to evaluate what direction the markets are going to be moving in over there in Japan. So when I look at the gold market from a price perspective, I say we've now made four distinct attempts to break out of this 2075 spot all-time high. It would be exceptionally rare. I don't ever use the word never with markets. That's a dangerous word to use, but it would be exceptionally rare for a market to form a quadruple top where it's trying to get above a certain level, not only 3, but 4 times over the course of 4 years. And then for that to morph into a top, my highest probability is that that is not going to represent a top, and that we are in the final stages here of chipping away at the overhead resistance just above 2075. Sometimes you can have these mini false attempts where the market is gearing up. It makes initial pop. It's not quite ready to sustain it. But I would say that it's very bullish that we're seeing gold now consolidate above 2000. I think if gold can consolidate above 2000 here for the next 1 or 2 months, it sets up for a trending move higher into new all-time highs, most likely starting in the first quarter of 2024.
Great. Well, I'd like to discuss gold mining equities now, because they do appear to be remaining undervalued compared to the metal itself. And, some people are saying, well, the gold price hit all-time highs, falling WTI crude oil prices, which is a main input for mining. Those combinations should be creating a catalyst for the gold mining sector, but it continues to underperform the metal. So what are your thoughts on the gold mining space and the setup for that? And Chris, I'll start with you this time.
So I think it's important for investors to think about different time periods here. Let's talk about the intermediate term. We're going to call that the next 2 to 3 years. And then let's talk about the 3 to 5 year outlook beyond that. The underperformance that we've seen over the course of the last 4 years, where, we have gold bumping up against this resistance, but you have the GDX or the HUI index, for example, making lower and lower peaks the entire time. That is what we would call a negative or a bearish divergence over the long run. It tends to be a signal that when we fast forward some years into the future, gold mining investors are already expecting that there will be a top in the price of the metals. So when I'm looking forward into, let's say, 2027, 2028, what I'm looking for is gold to be making another significant new peak here over the next couple of years. We may end up looking back at this as being a final wave of the move that started in 2015. I'm looking for a lot of the miners to be leveraging the gains that are coming here in gold as we move into the mid 2000s. But then I think when we take a step back, we look at how the sector has been underperforming here for the last number of years. I think that negative divergence is setting us up for, let's call it a multi-year top in the price of gold from a higher level. A few years down the road, we could be talking about it at 2,500, maybe even approaching 3,000. And then I think from those levels, gold's going to retrace for a number of years. The sector will reset, and we'll talk about what sort of cycle is setting up at that point. Just as a quick side note, I want to give Jeff, of course, a chance to weigh in on this topic. But as a quick side note, in the 1970s, we saw a lot of the gold mining companies underperform throughout the middle of the 1970s in the same way that they've done here recently over the last few years. And what happened, for example, Hecla mining was down 85%, even as the price of silver was sideways throughout most of the 1970s. And then in the last part of the move, 1978, 1979, Hecla was higher by 1,000% to play catch up. So I think something similar is likely setting up for this cycle. We just have to keep in mind, I think we have an exciting couple of years here setting up, and then we have to be careful when we look into the later part of this decade.
And Jeff, your thoughts on the gold equities at the moment, how you see them positioned? Do you concur with what Christopher is saying?
Yeah, I want to echo what Christopher's saying, because he's right. In the 70s, a lot of mining stocks, especially the funds, the Barron's Gold Mining Index, didn't really move that much. Gold moved first, and then the funds actually caught up and passed the gold in a big way. There's tons of examples in my book, not trying to push that, but I was able to dig up just tons of examples, dozens and dozens of examples of stocks hitting pay dirt, if you will, in the middle of that run, rising not just 1,000%, but some went up 10,000%. There's one in there that went up 45,000%. So, but that's right. That's very common for that to happen toward the end. So you kind of have to hang in there. But what we have now is really been debilitating for many investors. You have gold near all-time highs, and you actually have the producers earning a profit, right? Many are making money, and if they're not in this environment, that's one you might want to take a second look at. But they're actually earning good profits, but they're not. The stocks are not performing well. And the culprit there is basically sentiment. I don't think it's the oil price or anything like that. Oil did spike up earlier this year and gave it all back, but it's roughly about where it started the year at. So, and of course, that average throughout the year is what you need to look at for what producers are paying for oil to run their operations. But, it's really sentiment to me. It's still very poor. And I think most viewers know that own juniors that it's even much worse for them than it is for the producers. So at some point, there's going to be a shift in sentiment, and everybody's going to want gold mining stocks. And I think that's when the kind of period that Christopher's outlining really begins to take shape. And I do expect to see a shift in sentiment in 2024. I don't like to make predictions. It's so easy to be wrong, but it's certainly feeling like things are gelling here and are gonna break out in the new year.
The era of globalization has now come to an end. Countries and corporations are right now racing to secure the materials they need for their supply chains. If you are serious about your portfolio for 2024, then get yourself to the Vancouver Resource Investment Conference in Vancouver, British Columbia on January 21st and 22nd.
Well, you touched on sentiment there, so I'd like to discuss that for a moment here, because you're right. It is at a very low point right now. I get a lot of comments in videos both on this channel and my own channel as well. Whenever I discuss the precious metals and particularly the equities, there's always some story, some sad story in the comments about someone who claims how much they're down, they're throwing in the towel. These metals are manipulated, both gold and silver, and for as long as the big bullion banks are around, that they'll never go anywhere. Maybe you could touch on the psychology required to weather these downturns and to weather the volatility in the gold and silver sector. How do you deal with that personally? And Jeff, I'll start with you.
So the main reason that I remain not only invested in gold and mining stocks, but optimistic about them is because of what history says. And history says that they cycle. Gold itself cycles. If you pull up a long-term gold chart and put it into a log scale where it's measuring just percent gain, not the price gain, you'll see these many cycles in the gold price, big run-ups. And guess what? Gold stocks do the same thing. They cycle along with gold. Some underperform, like Christopher's pointed out, some match it, some exceed it, but they do cycle. And we've had a down cycle now since the COVID bounce, so it's been a little over 3 years. Guess what comes next? an upcycle. I wish I knew when, but I'm preparing for that. I'm not trying to predict when it happens. I'm trying to prepare for when it does happen because history tells me that it's going to happen. And so if you understand cycles, and I don't mean to demean the person who's the investor who's really underwater and hurting and doesn't know what to do. I understand that. I get all that. I would hang in there, make sure you clean up your portfolio, get rid of the ones that are not likely to come back, stick with the strongest. If you have a little extra cash or you sell some of the ones that are not going to come back, maybe you could redeploy that and take advantage of current prices. But for me, in my opinion, my portfolio is gearing up for a reversal in that. I think that'll happen. We are not the first set of investors to lament the poor sentiment. It happened back in the 1990s. It happened in the 1970s. They made gold legal again to own in the U.S. And guess what the price did? It went down for a year and a half. So there are many periods like this throughout history where what we're seeing now has been seen before. The next cycle is up. I am personally preparing for that.
And Christopher, your thoughts on the approach you take to investor psychology, and do you think a knowledge of technical analysis can kind of help people weather these sorts of storms by understanding the price action better?
I do, especially when you're talking about looking at historical analogs. That example from the 1970s when silver was flat from 1974 through 1978. Imagine this. Silver was consolidating just below $6 per ounce for 4 years, in a very similar way to how it's been consolidating here for the last 4 years, just under $30 an ounce. And you had the large cap silver miners, as silver was completely moving sideways. You had the large cap silver miners falling by 80 to 85% throughout that period of time. And you ask, well, why? It doesn't make any rational sense. And that's exactly right. The market is not rational. And it's an investor's job to understand that and to be able to weather the irrational periods in the market. In my experience as a publisher of articles on Gold Eagle, as a publisher of videos, looking at membership statistics, a lot of other metrics that we have, my observation has been that the worst backdrop for sentiment in the precious metal sector is when the metals move sideways or flat. It's actually better for sentiment when the metals are falling, because then you have more people interested. Hey, is this a bottom? Is a bottom setting up? And of course, when the metals are moving strongly higher, sentiment is good as well. So you look at the examples from the 1970s, you look at the current example where we have sideways price action for the last number of years. Another way that investors can look at sentiment, it's very interesting to go and do a Google search. There's an analytical tool on Google where you can search for trends, interest in certain keywords over time. And so, for example, if one does a search on that, on the term gold price, just very simple, gold price in quotes, and you pull it back over the course of the last 10 years or so, you'll notice that in 2011, when gold prices were roughly the same as they are today, the level of interest in gold price was 4 times the amount that it is today. So what that's telling us is that even as gold is sort of creeping up here and on the verge of the breakout, the mainstream interest is just not there. The mainstream investor is perfectly content to be investing in their 401k or, holding US dollars or whatever. When we start to see those sentiment readings get back up to peak levels where they were in 2011, this may be a time to take some profits off the table. I suspect that's about 2 to 2.5 years away. We're not there yet. By every metric we look at, this has just been a stealth middle phase of a bull market where we don't have the mainstream participation. Investors should really take a look at their own portfolios, make sure they're not overexposed, of course, but with the proper level of exposure, this looks to be a ripe setup.
Well, I wanted to get both your thoughts on central bank gold accumulation, which has set a record pace in 2022, and looks like once the data comes out, 2023 is also going to be a very strong year for central banks purchasing gold. I'm wondering if you think this played a role in gold's current resilience. A lot of people think gold should actually be lower in the face of positive real interest rates. And do you see continued central bank buying as a potential catalyst for the gold price as we move into 2024? Christopher, I know you focus more on the price outside of these sorts of fundamentals, but I'm wondering what your thoughts are on central bank gold buying.
Um, yeah. So you said the initial outlook there, which is I believe that all of the central bank buying or selling, all of the buying or selling from everyone gets baked into the current price. Everyone who's going to buy or not going to buy or thinking about buying or waiting to buy, they all say, well, the current price is either an appropriate level or not an appropriate level. That's my philosophical backdrop. But when we get into more practical terms with central bank buying, I am not a big believer in central banks being omniscient, knowing all of the data available or being able to time their purchases perfectly. We have plenty of examples of that. You look at the quote unquote Brown bottom, where Gordon Brown sold half of the Bank of England's gold at the absolute lows in 1999 at $252 per ounce. They got it wrong. You look at a more recent example. Look at when the Bank of India bought 400 tons from the IMF back in 2009, when gold was just at about the 1,000 level. So that was a good purchase over the next few years. But then did the Bank of India know that the price of gold was going to come back to 1,000 in 2015? 6 years later, they could have, let's say, just earned a little bit of interest, waited till 2015, backed up the truck then, right? So the point that I'm trying to make is central banks can be wrong just as often as they're right. I don't put a whole lot of weight into them. Maybe Jeff has another opinion, though. I'd love to hear.
Yeah, Jeff, what are your thoughts on central bank gold buying?
So central bank gold buying does affect the price, but it usually only acts as support for the price. It doesn't usually determine the upward momentum or kickstart a new bull trend or anything like that. Maybe the gold price would be at 1,700 or 1,500 if central banks weren't buying so much. But if you look at a chart of all the central bank gold buying annually, you'll notice a very clear uptick in an uptrend in what they've been buying, the amount of gold they've been buying. And these are countries that have been subservient to the US dollar. These are countries that have had a lot of geopolitical concerns, a lot of economic concerns. So central banks usually buy gold because they want to stabilize their currency or help backdrop their economy if the need ever arises. So they're looking a little bit less at price. I think they do look at the price, but totally agree with what Christopher's saying. They're not omniscient in terms of knowing when the best time to buy is in terms of price. But they are buying usually for a more long-term concern or a bigger picture concern. The fact that there's been such a big uptrend in the amount of them buying should be some kind of signal to us that, hey, regardless of what they say, they see some concerns in the global economy or the global monetary system or whatever, the case might be. So if they're buying, shouldn't we be buying? And that's the message for me. I think it's really important that people have meaningful exposure to physical metal at this point in history. Hey, someday, you know what? I hope I can sell all my gold because I don't need it because the economy is so strong and the monetary system is so sound. We're not there remotely, right? And so therefore, you have to own physical gold outside of the banking system right now. And I think they're telling us to do that by their amount of buying.
Well, we are moving into 2024 very shortly here. So I would like to get both of your forecasts for gold and also silver, because we haven't discussed silver too much at this point. I'm very curious what your thoughts are there. Do you expect silver to follow gold? Do you see it now as perhaps more of an industrial metal that will trace something like copper more than it will gold? And Jeff, I'll start with you. price predictions are kind of ridiculous. It always annoys me when hosts say, "What price will gold be by the end of 2024?" But perhaps you could give us
Right.
a range for both the metals, or just your thoughts on their price action in general, and where you see both of them headed next year.
Oh, my prediction for 2024 is gold will be higher. There you go. That's it.
Nice.
I don't really have a price prediction. Christopher would be much better at that. But I do think it's going to be higher. I do think 2024 is the year that gold does break to new all-time highs and stays there. I think once we have a decisive breakout, and a lot of this is like what Christopher's pointing out, it's technical based, right? It's psychological. Once there's a decisive breakout and it stays there, that's going to draw more people in. And I think that could lead to the reversal in sentiment in the mining sector as well. Yes, silver's going to trail. So, hey, if gold breaks the new all-time highs and it stays there, let's say that happens in 2024, it might be another 6 months before silver begins to move. It historically, its DNA is it's going to remain flat. It's going to do nothing. And then all of a sudden, it's going to ignite. And if you're not already on the train, it'll be too late. It'll be a bullet train when it takes off. There are many examples where silver just spikes out of the blue. Many examples in the last 50 years where it does this. So I would want to make sure I'm long in silver. Yeah, and some of those, by the way, that say, silver is just the industrial metal. I understand that argument. Industrial uses of silver are climbing. Its percentage use of supply is climbing over time, but that's like a cargo ship in a port trying to negotiate a 3-point turnaround. That's going to take a lot of time. In the meantime, we have the silver price like a speedboat whipping around the waves, spiking. It did that in the COVID bounce. Everything fell, and guess what? Gold rose 40% coming out of that. Silver rose 140% coming out of that. So I think that's going to happen again for silver. The catch is you have to be long before that happens, or you really won't capitalize on that real big run. So there you go. I think gold does make new to all-time highs next year. Silver will follow, but not right away.
And Christopher, your thoughts on gold and silver and how they're going to perform in the new year?
Similar outlook to Jeff, and of course, we don't have to agree on everything here. We are able to see the markets from different sides. So every investor needs to think about this for themselves and arrive at their own best conclusion. But just to, let's say, take Jeff's ideas and then dial in on a few specific price levels that I'm looking at. When gold begins its trending move higher above the 2075 level, which I believe is going to start in the first quarter of the year, I'm actually looking at it as being a two-year trending move higher. So I can't necessarily give a forecast for 2024 alone, but if we think this move should be starting the legitimate breakout early 2024, I think when we're looking 2024 and most of 2025, that's how long I would like to extend out my forecast. I'm looking at a specific number, actually, which is going to be 2,535 as a defined target when we're talking about the 2 years after the breakout starts. And that level is defined by the entire amplitude of this consolidation that's been going on for the last 4 years. If you take the precise amplitude, it's a $460 amplitude that we've seen. And you think that's the amount, that's the amplitude of short sellers or hedgers, mining companies that have sold forward their production in this consolidation, short sellers, speculators, manipulators, all those groups of people, that when gold begins to break out, they're going to be forced or have let's say a high level of motivation to want to cover their shorts over the course of the next 1 to 2 years following the breakout. Of course, then you're going to get momentum buyers coming in, then you're going to get all sorts of speculators coming in, and so it's possible to overshoot that target. But my defined target is 2,535 within 2 years after we see the breakout occur. I do agree that silver is going to lag gold. We still don't see evidence that silver is ready to outperform gold yet. That gold to silver ratio is still not trending lower in favor of silver. So it has some work that it needs to do. But, you know, Jeff, when he was talking about the previous cycle, just to add a bit more detail to that, you know, he was right that silver lagged. You look at the breakout when gold made new all-time highs, similar to what it's threatening to do now. We go back to the cycle in 2009 when gold finally broke above $1,000 per ounce. It was September of 2009. Gold was then trending higher, 1,200, 1,300, 1,450. Silver consolidated for an entire year below $19 per ounce, just, you know, 19 to 17, very, very lackluster, very frustrating. And then boom, as soon as enough of that metal had been taken into strong hands, it moved from 17 to $50 per ounce in 7 months. And those are the kinds of moves that these silver miners that have been lagging, these things can go up 500, 1,000, 2,000%. We're talking in these windows of, let's call it 4 to 8 months when that finally occurs. But you gotta keep watching gold as being in the driver's seat. Notice where silver is consolidating. Notice the formation, the consolidation, and then, man, when that thing breaks, that's your window for silver and the sentiment to really start to revert higher.
Well, let's touch on the equities here. And I'm wondering, when it comes to the stocks in both the gold and silver mining space, are there any names in particular you're currently investing in or watching that you think have a good shot of outperforming in 2024? If you're not comfortable naming individual stocks, happy to hear your thoughts on where you look for value in the mining space, whether it's the exploration, development, production. And Christopher, I'll start with you.
Yeah, you know, right now, I think the sweet spot is in defined deposits. I'm most interested in defined deposits where you've got either a measured and indicated or a proven and probable resource already in the ground. Because you have the backstop of already something being there, something that we know is in the ground, but where that sentiment that we just talked about, since it's really deteriorated, even irrationally, as we've said, as the price of gold and silver have moved sideways, these defined deposits, in many instances, are selling for about 20% of the value that they were selling at just a few years ago with the same prices of the underlying metals. So, I mean, exploration, of course, is the grassroots side of this industry. There's always a place for exploration. But in my opinion, the sweet spot right now is in the defined deposits that are just being sold at a fraction of the value of a few years ago, because those things should be the first wave. When the first wave, you know, I should say the second wave, after the large cap companies move, it's then the defined deposits in the ground that are going to revert back to that value. And then typically some of that money will flow into exploration names in the later part of the cycle. So one company I like a lot right now is called Bravada Gold. They're sitting on a measured and indicated deposit of 1.25 million ounces of gold. So it's a nice modest sized deposit. But really it's the valuation that I like. This company is based in Nevada, so it's politically safe jurisdiction. They have an experienced management there. You know, you talk about the valuation. So over 1 million ounces of measured and indicated gold at their flagship Wind Mountain deposit, selling for a market cap of $5 million. So that means the market is pricing the gold at $5 per ounce. In a healthy bull market and in previous cycles for let's say a junior development company like this, somewhere in the range of $50, even up to $100 per ounce was quite common for this stage of company. You just look back at 2010, 2011, same gold prices, just radically different valuations. So in my opinion, right now, companies like Bravada are low-hanging fruit. It's, if we're right on the macro thesis, these things are going to revert to the mean in a big way.
And Jeff, your thoughts? Any stocks that you're currently investing in or watching that you think perhaps people should be paying more attention to?
Yes, I like what Christopher's pointing out because there's a little less risk with a company that has ounces in the ground. So your developers, even your explorers that already have a resource, or maybe an early producer with a bigger resource, th those are great plays because they are just like juniors. They're dramatically undervalued. They're two standard deviations below where they should be fairly valued at in a normal bull cycle on average. So you have tremendous potential there, and the money will move first into the producers and then into these companies. I like to, I'm all about exploration. So my dad was a gold prospector. Our logo on the side is a prospector holding up a gold nugget. So that's the part of the elephant that I like to look at. Hopefully, it's not the wrong or back end of the elephant, but um, the two names that I like that are going to be at VRIC, so people coming can talk to these companies, but I like Tectonic Metals. This is an early stage explorer up in Alaska. They've just completed drilling, and so drill results are going to be out right here after the new year. I don't think they'll be out this late in the year now, so look for them in January. Quentin Henning of famous geologist, very popular geologist, has asked the question, is this the next Snowline? And if you don't know, Snowline Gold made a huge greenfields discovery up in the Yukon. Stock's gone 13x for us. So he asked the question, could this be the next Snowline? Because it's actually on a similar mineral belt. I don't know if it's going to be that big, but they don't have anything. And the stock's at 10 cents roughly. So there's some huge potential there if they make a discovery, and we're going to know that next month. So that's a position I like. I also like, if you want a lithium play, I also like Brunswick Exploration, an early stage explorer in Canada, mostly in Quebec. They have numerous land holdings. They made some technical discoveries last year, which moved the stock a little bit, but we're looking for that big potential splashy drill result, right? Well, they're going to be drilling aggressively in 2024, starting next month. In some of those places, they can drill in the winter. So I think, again, early stage greenfields, but they've already made some technical discovery. So the odds are very high that at least one of those hits sometime in 2024. Again, both those companies will be at VRIC, so hope to see some people there.
Great, yeah, and both of you will be at VRIC as well. So if people want to chat with you, they can find you there. Also, it's been an awesome conversation, guys. This has been a masterclass on the gold space. Before I do let you go, Jeff, tell us about the Gold Advisor, what it is you do there, and where people can find it.
So I decided to make my site free. It is a sponsorship site, meaning the companies on the site do pay for it instead of a subscription site where the investors pay for it. So full disclosure there. But many companies ask to get on the site, and I only invite the ones that I believe are going to be the strongest of the strongest, best of best to get on the site. So that's where it's at, thegoldadvisor.com. You can check it out for free. And I will mention just real quickly, watch your inbox if you follow me or our newsletter. We have a very big announcement coming in January.
Great. And Christopher iGold Advisor, where can people find that, and what is it you do there?
Yeah, thanks, Jesse. It's been a great conversation, by the way. So the website is the letter I and then goldadvisor.com. You can also follow me on Twitter. The handle is at iGlobalGold. And what we do is a combination. I have a number of investors. We come together. We do private placements a few times a year. We kind of pool our capital and negotiate terms with these mining companies so that we can all get better terms on our investments together. And then we also have a flagship research publication called Precious Metals Intelligence Plus, which covers all the price action in gold, silver, related commodities, and currencies every week.
Great. Well, I'll put links to both the Gold Advisor and iGold Advisor in the description for people who want to check them out. Once again, gentlemen, it's been an honor, and thank you so much for coming on the show.
Thank you very
Great.
much.
Thanks for having me, Jesse. This was very good.